Let's have just a very quick recap of the markets. Obviously, we've just had a couple things just come out. We've had Mario Draghi delivering a speech at the Lindau German Symposium, and then we've just had that followed up with some very strong manufacturing data coming out of Germany. That follows on from a 6.5-year high we've just had in French manufacturing PMI as well, and we'll have a quick look at those. First of all, let's have a look at this Draghi speech. And a lot of people were looking forward to this particular speech from the ECB president because of the context of the current policy timeline, the fact that we're looking out for any further hints towards their eventual plan and timing for QE tapering. This also as well, in the context of the week, comes ahead of his appearance for the first time in 3 years at the Jackson Hole Symposium, which kicks off tomorrow and continues then on Friday when we get the keynote speech from Janet Yellen, which also will be instrumental for near-term policy outlook for the Fed. So a lot of people were looking forward to this Draghi speech with anticipation, and actually it's been a bit of a damp squib. There's really nothing at all that's come out of it. This is kind of the process that I would go through typically when this type of thing is scheduled. Let me just run you through a couple things. Firstly, yesterday I would go to the media section here. This is the ECB website. I'd go to the media section, I'd click on there, that gives you the pop down menu. I'd then look at the weekly schedule. I'd then scroll down to the current day of interest, so Wednesday the 23rd of August, and you can see here every week the ECB press office will issue the definitive kind of scheduling for every speaker of the ECB, where they're speaking, what time they're speaking, and quite importantly as well, whether or not the text will be made immediately available on the website, because sometimes this can then dictate whether or not there's going to be a flush of comments immediately on that embargoed time of release, or also as well, if there's a Q&A, then it should say so in this particular section. So this is the planning. Then on the actual, when the release is coming out, so in this instance, none of the major newswires ran the Draghi headlines immediately at 8:25. So what I'd do is I go on the ECB website and, just getting a bit old school, hitting F5 frantically. He who can update the ECB website the fastest is king in this scenario. And actually what I'm looking for here is when I'm refreshing this website, it's almost like when you get a text alert on your phone. And because every prop trader on the planet is doing the same thing, if you can get it quick enough, you see that this one populates over the speech category here in the middle. That means then that there's been a new release. I hit that, Draghi speech was immediately available, and there you go, I could see it. And actually I reckon I probably got it about 20 seconds before the squawkers started covering it, which is when probably some of the major newswires started releasing it. So you did have a bit of a time advantage. What I would do here is I have a very quick skim over the first kind of section, but then immediately I scroll down to the bottom, I go straight to the conclusion, and then essentially I speed read this entire section for anything on those real three categories that I said heading into this event we were looking for. Any comment on the euro exchange rate, any comment on ECB and their assessment of inflation, and any signals towards quantitative easing and their kind of sequence and how they tend to taper that program. Upon reading this conclusion, which I'd probably give no more than, I would say maximum 10 seconds to read, because I'm just looking out for keywords, don't forget, I can pretty much ascertain that there's really nothing here at all. Normally on a monetary policy or economic speech, there's certainly plenty of hints within the conclusion. Its purpose that summarises the overall speech and its content. So nothing came there. The next thing I'd do is Control F, and I would search inflation. I'd go through, I can see there's 3 hits for inflation, but you can see the structure of these sentences in 1970, governments, talking about historically, this is all very much academic, how people are looking and monitoring inflation. That's 2 of the inflation words. This one here, empirical evidence, substantially success policy supporting economy inflation. So again, none of this is relevant for financial markets in terms of trading the instruments right now. This is just a academic paper by all means. I then look at the other key things like exchange rate doesn't even appear. You see 0 hits. QE gets a couple of hits, but again, you can quite quickly see that this is not in the context of the current economic environment. Therefore, within about 30 seconds, even though this speech is probably something circa, I don't know, 2,000, 1,500 words, you've read it in terms of trying to pull out what it is that's important to potentially make a short-term investment decision. So nothing came of that data. And actually, then I would say we have to look at when Draghi's going to speak at Jackson Hole with some renewed interest. There was some thinking that he might front run some commentary in today's speech in order to lessen kind of market volatility around Jackson Hole, but it seems as though we're going to have to monitor the Jackson Hole speech now quite closely for if he comments then more explicitly on their forward-looking kind of policy path. Now, around this speech, although this was the focus, you've also had the release of the flash manufacturing and service PMI data for August from the Eurozone. Now, the service numbers were pretty in line, but it's the manufacturing ones that I really want to show you. And first of all, we had the French manufacturing PMI, and the headline reading for the French number was at 55.8, above the expected 54.5. In fact, this is the biggest expansion in manufacturing activity in France in nearly 6.5 years. Exceedingly strong data from a historical basis. You can see here, this is kind of going all the way back. If we max out this chart, well, which it is at the moment, you can see not been this high for several years, and it exceeded market expectations. New orders on the constituents of the report rose the most since December of 2010. Job creation remains strong despite slowing from July. Backlogs of unfinished work continue to accumulate. Then we were followed up by Germany. And if you were kind of putting a weighted score, let's say, on the impact of these data points, then the French number was good. We've just seen that. But maybe a lot of people would have been reticent to enter the market heavy-handed, given the fact that that French data came out at 8 o'clock, and you, of course, were awaiting Draghi at 8:25. No real need then to step in the market and start committing capital at that point, because you just don't know what Draghi's going to say. But then Draghi doesn't say anything. You've already got a positive economic data point, and a very positive one from France. Germany then comes out 5 minutes after Draghi, and this is what that German number looks like. Basically, we're back up at a 2-month high. Now, 2-month high might not sound much in comparison to the French figure, but let's put this back on a longer dated chart. You can see up at around these 2-month highs and around near to 60. These are the best levels in German manufacturing pretty much since we've had since 2010. So again, exceedingly strong. Against market expectations, the German headline reading for the manufacturing was 59.4, above the expected 57.7. So all in all, Draghi was a non-event, but the data was really strong, and so we've had an immediate surge in the euro currency up towards finding resistance here, pivot to the tick in the futures market, 117.93.5, hit that level, and has just run into a bit of a barrier at that point, but a pretty quick acceleration in price movement on the back of the German figure, because once then, major risks have passed, and overall, on the balance, it's positivity on the data. Consequently, Bund moved lower. You can see here, bottom right, we're down around 13 ticks. We are sub-pivot at the moment. Could be quite interesting here, pivot also being that low that defined yesterday afternoon's low in the futures market. You can see after breaking that, we've come back to that 64.32 level. Equities is a little bit more tougher to read, because if you look at, let's put this on a minute for a second. You can see this was the futures open in combination with the French figure. The DAX rallies higher. Then you have half past, the German number comes out really strong, and the DAX falls, completely retraces pretty much to the tick the entire up move that was seen at the open around the French data and the Eurex open, or the cash, excuse me, open. Now, why has this happened? Well, if you think about it, if the euro is appreciating, that tends to have an inverse relationship with the DAX movement, given the impact that that would have on the export names. But more importantly, I'd say from a monetary policy play, if economic data is substantially strong, then Mario Draghi and his ECB committee have strong conviction to be upbeat and optimistic about the economic prospects of the euro area. And if that happens, what does that mean? That means they can continue toward their path of policy tightening, and that generally is a net negative for the equity market. So data really taking significance. And from a global perspective, when we get the PMI data, it comes across all of the different countries. We did have Japan overnight. This is what the Japanese manufacturing PMI looked like. 52.8 compared to a final reading of 52.1 in July, and it was above expectations of 52.3. It was the highest reading since May this year. Output, new orders, new export orders all rose faster than expected. So some pretty decent numbers globally here on specifically the manufacturing side. This is the Japanese number I was just looking at. Okay, a few other news items that I just want to quickly run over, and then I won't keep you much longer than that. One is Brexit. Where are we at the moment in terms of these discussions? Well, Theresa May once again coming under a little bit of pressure from the more hard Brexiteers of the Conservative Party. This is because, as I've talked about for a number of weeks now, this inevitability of the fact that certainly there will be a concession, I feel, on the behalf of the UK side in order to get this divorce bill settled and a transitional deal secured in order to then initiate these trade talks. So to me, unsurprising, but certainly this probably is not going to do Theresa May's popularity any favour with the more kind of right-leaning Conservatives. Essentially, Theresa May has conceded the European Union law will influence the UK long after Brexit. And obviously, as they're stating here, this is a big climb down from what her initial objective was, which was to take back control and not have it in the hands of the European Courts of Justice and so on. But this is inevitable. I mean, you're not going to be able to... This whole idea of taking back control is a bit of a long shot in terms of it certainly could happen, but not, by no means in the time frames of which a lot of the politicians were talking about when they were trying to kind of control support for their political campaign. So now the kinds, it's all coming home to roost somewhat. So this, of course, comes at a fairly interesting time from a political point of view. You've got the Conservative Party conference that happens at the beginning of October every year. If you remember, October, I think it was October 4th of 2016, that was when the pound saw one of its bigger down days of the year. And that was because that was when Theresa May first ushered those now infamous words of hard Brexit. It'd be interesting to see how she fares amongst all of the party gathered in one forum, just given the division that's obviously been quite apparent within the Conservative Party. So that's the latest on Brexit. I wouldn't say this is having a big impact on the sterling currency this morning. If anything, cable has been looking generally a little bit heavy post the weakening inflation path that we saw emerge from the data from last week. So it's worth watching these downside levels. You've got the overnight Asia Pac low that was seen down at 128.10. Should we continue this move any further this morning? Okay, the other thing to be aware of from a news perspective, of course, is Donald Trump. And this time, he's been out again making some new comments where he's basically threatened government shutdown unless we get the funding to build the wall. The wall, obviously, this is about the border with Mexico, which was one of the very first kind of points of which in his presidency he tried to bring forward. Here we are some 8 months later. Nothing actually has happened, but he's using essentially the leverage of the fact we're about to expire, essentially, the amount of money in which the US can take on credit, because we're approaching the debt ceiling. And so come October, we're going to hit that ceiling. And inevitably what's happened in the past is that you get a lot of blinksmanship amongst the politicians on Capitol Hill, because they use this as a situation to then leverage their own agenda in order to get sign-off for various different bills or financial requests. And then they inevitably 11th hour make an agreement, and then the debt ceiling gets raised. And so the US can continue borrowing for the foreseeable future. Trump has basically threatened to bring the US government to the brink of shutdown, if needed, in order to pressure Congress into funding the border wall that obviously was a centerpiece for his 2016 campaign. Whether or not this comes to fruition, I would say a lot of this is hot air, because anyone who's lived through a couple of these risks of government shutdown in the US, and when this actually has happened before, a few years ago, they tend to get quite vocal heading into this as a political maneuvering. And so this isn't particularly unusual, I feel. So at this point, not reading really too much into this, but US equities did see a little bit of downside weakness, and sentiment was dampened slightly on the back of this, because it's just another example of Trump acting in a way that just adds to fragility in terms of market confidence. Let's put it that way. Talking of Trump, though, he did do a pretty good job at supporting markets in yesterday's session, let's not forget, and this came amid the further details. There's said to be a much more thorough plan coming together in regards to the details on corporate tax plans, i.e. corporate tax cuts for individuals and companies. So certainly Trump's still a predominant driver of global financial markets. A few other things, other headlines. UK employers hiring confidence lower since Brexit, say recruiters. Again, this is not that surprising. My kind of medium-term view on this is the fact that once the UK does manage to make sufficient concessions to the fact Europe can then make an agreement about the value of this settlement fee, we'll actually start to see some clarity, at least, where we can secure discussions with Europe beyond March 2019, when obviously Article 50 expires. This should then see these types of lack of confidence, or for companies, they should start to return, and more normal business should resume, but only upon when there is that clarity, which we haven't yet got to at this point. So things still looking or still building on the more negative side until that day occurs. Quick look at oil, and of course we had the API crude oil inventories last night, and the standout figure here actually wasn't the crude figure, it was the gasoline number, because the crude drawdown was about 3.6 million. This was pretty much as in line with expectations as you're going to get, i.e. within around 100,000 of forecast. The surprise though here was gasoline. Expectations were for a draw of 1 million. We got a build of 1.4 million. This is the third weekly build in gasoline inventories. So if anything, actually the market reacted negatively to the release of this data. So despite a drawdown of 3.6 million, this was the actual candlestick on a half an hour where it moved. So we moved from roughly 47.90 down to around 47.60. So decent move on the downside, and we remain at the lower bound of that move at this moment in time, 47.60 down around 23 cents. So we'll be looking at Flows Department of Energy numbers later, as per usual. Okay, quick look at the calendar. We've already had really the bulk of the main morning's events, this being the data manufacturing and service. Don't forget the European figure coming out at 9 o'clock now is pretty much a non-event, because we already know that manufacturing is going to be higher than expected. We've seen, you know, the fact that this figure will be the summary of its parts, and Germany and France have been exceedingly strong. So it should be no surprise to the market. The services will be pretty much in line. Manufacturing will outperform. Looking forward, then, pretty much wraps up most of the morning. We then have in the afternoon, you've got the market manufacturing PMI for the US, 245. New home sales, 3 o'clock. All inventory data at 3:30, as per usual, to follow up on the APIs we had last night. Fed's cap plan, just to wrap up, voter, leaning hawk, participates in a Q&A session. That'll be just after 6 p.m. this evening, if anyone's sticking around. Okay, guys, coming up to 9 o'clock then. Going to leave it at that. So very solid data this morning. Has seen the euro move back up within sight of 118 handle. So far held back by pivot in the futures. Equity markets not liking the fact that data is so strong, because it strengthens the ECB's hand to follow their path of hinting towards tightening in the near future. And so consequently, bunds also seem a little lower on those numbers. Okay, any questions? Feel free to reach me in the chat room. Otherwise, have a great day. Thank you very much.